Morning, Market Chameleons. Happy Monday morning, and soon to appear Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Great. Let's jump right to the disclaimer.
Yep. So good morning, everyone. Thank you for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's
Excellent.
the disclaimer.
Before we get started, D, I want to remind everyone we're having a webinar tonight, 6 p.m.
Yep.
Price distribution tool, right?
Yep. We'll talk about the price distribution tool, give a few examples of how to use it, why, what it means, what it's there for, how it could be helpful in your analysis. So that's what we're going to be talking about tonight. This is I'll show really quickly before we come back to the regular show. So this is what we'll be talking about. This tool over here.
Great.
Today, I think we'll talk a little bit what's going on in pre-market hours. Then we'll take a look what's coming up on the earnings front. If we have questions along the way, Will, let me know and try to get and answer as many questions as we can that are coming through the chat. And if we have time, we'll take a look at bullish bearish ideas.
All right.
So we'll start out with the pre-market report. These are stocks moving in the pre-market hours or trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look first at a more filtered report, what's going on in the higher market cap stocks. I'm going to use this filter and look for stocks with a market cap 20 billion or higher. So here we have 113 that made the percentage gainers list, 3 on the percentage decliners list. From that perspective, looks like a more bullish opening, more biased towards the upside at the open. At the top of the list, we got Plug, PLUG, up 8.5% on 450,000 shares. We could take a look at that one, and that is a energy company. Right? What are they? They're doing like hydrogen fuel cell technologies for clean energy.
Sounds about right.
So here we see on Friday, they're up 11.6%, which is pretty good. I think Friday we're down, right? The market was down overall.
Yeah.
Up 8.5% in the pre-market hours. I don't see, I'm just looking for some headline news here. But if you scroll down here, you'll get the latest press releases, headline news down here. It's not popping out at me, but looks at least at the open 8.5% higher. So let's take a look historically what that stock did when it gapped up at the opening, and let's compare today's gap 8.5% to historical gaps. So I'm going to use this gap up history tool. And what this will do is take a look at the 12 largest gap moves in the last 3 years. So we're going to filter those out to see what happened that day after the gap. So over here, we got the dates of the gap. We have notes here, which if you hover over any type of news events that were released that day, you could hover over, read those headlines, go to the news article. If the market was up that day, we also make a note of it. Market had a big gap. For example, June 12th, SPY was up 2.6%. And that could have been one of the reasons that in sympathy, the stock was up as well. But looking at the last 12 gaps, these are the morning gap moves over here. So you could see 15.6% January 12th, 10.1% gap up January 8th, and so on. So if we take the average of the 12 largest gap moves, we got about 10.5%, which today we're at 8.5%, a little bit below the average, but it's in that range. So you could see here it ranged 7% to 24.7%. So what did it tend to do after the opening? So the event is we see people are placing orders at the opening, driving the stock higher, up 8.5% at the open. If we open here, if we open at where it's in the pre-market hours, what did it tend to do after the open is the question. So from the open to the high of the day, on average, it gained 6%. So from the open to the high of the day, 6%. So you can see here, these are the ranges, last 12 observations out of these. From the open to the low, the average move was down 4.9%. So this is letting us know that, at least from historical perspective, a little bit more biased towards the upside than downside as far as magnitude of the move. From the open to the close of the day, it tended to finish higher than the opening price, 58% of the time, 42% of the time lower, for an average gain of 1.6%. So that's really quickly a historical return distribution for plug after having a gap up morning. Now here you could also see what is the volatility on days like these. So gapped up in the morning, from the opening to the close of the day, what is the average move in either direction, up or down? So that's if we converted all the moves to positive moves. These are the drifts from open to close. That's 5.5%. So still pretty volatile in either direction, 5.5% move up or down. So that stock has had some volatility during the day as well. So that's really quickly plug power. And if you guys want to, when you open it up and you don't know what the stock does, a good way is just to click on these informational sheets. So it kind of gives you a little bit of a background, like it's an electrical equipment and parts. You could see the 52-week range in the stock over here, high low on the previous day, 52-week range, as low as 253, high 75.49. You got your volume statistics here, market cap, implied volatility rank. If you want to read about it, this is what it does. It's an innovator of modern hydrogen and fuel cell technology. So you could read more about it. And if you want to go to the website, and you see this link over here, just click on the link and then go read more about it. Because anytime before you even get involved in a company, it's a good way to learn about what these companies do. Like, what are they working on? What kind of problem are they trying to solve? What is the market for it? What are the competitors? So here you could go and start reading more about what these companies do by going to their website, going to their investor relations sections, just to learn what's going on. I'm going to close this real quick. So that's plug power. And for a long time, well, right, they've been like very, just recently, they've been really rallying. For a long time, I've heard the stock, get mentioned, and they've been sitting at very low prices. So, now 25.9 billion market cap. Well, are you there? You can't hear me?
Yeah, I'm here.
PLTR up 6.3% in the morning on 3.1 million shares. That looks like, it sold off a lot from its high. I think it reported earnings down to $23.90 on Friday. In the morning, up 6.5% to $25.45. I think there was some headline news there. Kathy Woods added more shares to her ETFs over here in Palantir. So, and what do? They take data and put it into some software to give you more insights into
exactly.
operations.
They're one of the largest data miners, and they have big contracts with the government as well to provide data services.
Right. So it's like a data analysis software.
Yeah.
Let's take a look how they did historically after market after opening up on a gap move. So up 6.5% in pre-market hours on 3.2 million shares. Let's take a look at its gap history. So again, this is looking at the 12 largest gap moves in the last 3 years. I don't think the stock's been around for that long yet. It's just probably IPO'd what, a year ago or less. But
yeah, it hasn't been around long at all as a publicly traded company.
Yeah,
I
so you
think,
can
I think
see
it's been in existence maybe almost 10 years, but yeah, as a public company only.
right as a public company to see shares trading not that long. So these will be the 12 largest so far in its history as a public company, because it hasn't had 3 years yet. Opening gap moves. So we could see here 7.6% up on February 19th. If you could go over here, read any of the catalyst news behind that move. 8.7% move on February 8th. Again, hover over there. You could read about the news here, but let's see. On average, its 12 largest gap moves average 6.1%, which is kind of what we're doing today. What did it tend to do after the opening? So from the open to the high of the day, average move was 6.5%. From the open to the low of the day, average move was 6.8%, down 6.8%. So we're getting like a range here. From the open to the close of the day, it finished lower more often than higher. 67% of the time it drifted lower from the open. 33% of the time drifted higher, for an average 1.6% decline drift after gapping up in the morning. Again, this is a historical return distribution around PLTR after gapping up. You could take a read what the catalyst is behind this move and decide if that's justified or not. As far as volatility goes, after opening up on average, the move up or down in either direction was 5.1% up or down. So you got some volatility in this stock as well intraday. So that's really quickly PLTR, Palantir. NEO up 6%. We'll talk about, I think they're reporting earnings today after the market close.
Yeah, they are.
All right, so we'll talk about, we'll get to the earnings. Maybe we'll mention NIO. Baidu up 5% in the morning. I think it had some news here, and it's interesting. So that's a Chinese stock, and I always knew it as a kind of search engine almost, or internet content provider. But lately, I think they've been expanding into kind of like Amazon does into other fields. I believe now they're, well, like over here, let's just take a look at some of these headline news. Looks like now they're getting into smart energy. And I also think that they're getting into artificial intelligence and autonomous driving cars. So they're getting into those fields, and I think that's also causing some enthusiasm, excitement as well. But today, up 5.3% in the pre-market hours. Take a look at that gap history as well. So again, 12 largest gap moves in the last 3 years. On average, gain, it was a 5.2% move to the upside compared to today's 5.3%. So that's in line with the average. What did it tend to do after the market opens? From the open to the high of the day, average move was 3.3%. From the open to the low, average move 2.9%. So slightly biased towards the upside. From the open to the close, 67% of the time closed higher, 33% lower from that opening price for an average gain of 0.9%. So that's really quickly. We went over a couple, three or four stocks, I think, for the open. So if there are no questions on the pre-market, Will, I'm going to move on to earnings.
We did have a question, and it's about the gappers you were showing. That's part of a premium service, correct? And if which service?
So the analysis is, yeah. So if you click on it and do the and then go down to the analysis, this would be part of the premium service.
Now, which
you're
premium
looking at
covers
these-
this service?
I believe it's the stock trader and then total access. So total access always includes all the memberships, but the stock trader would include this service here if you're doing the opening analysis. By the way, after the open, then if you come back to this, it tracks it during the day. So it provides more analysis during the day. Sorry, this is the gap down. So during the day, I believe, this expands to more now, more statistics intraday. So you could come back towards the day and see how it's faring versus historicals.
Excellent.
Yep. If there are no questions on this, then I'm going to move on to the earnings.
Cool.
Upcoming earnings. So we're going to take a look at stocks that are expected to report earnings in the next 2 weeks. So I'm going to go here, full report here. And I'm going to use this filter to look for stocks that on average trade 5,000 option contracts per day or more, just to get the more liquid stocks in there. So we see here, after the market close, I'm going to, just to save some time, I'm just going to go towards to the higher volume stocks. So I see INO, that's expected today after the market close. The straddle right now is implying a move of 14.9% in either direction, up or down. So when you're buying a call, buying a put, you're looking at the magnitude of the move, up or down. That compares to historically, on average, INO move in the last 4 quarters, 22.8% in either direction. So that's the magnitude of the move on average in the last 4 quarters. In the last 12 quarters, on average, the magnitude of the move was 11.3%. So we're looking at the straddle right now implying it's 7.9% below the 4-quarter average, 3.6% above the 12-quarter average. The high move on that stock after reporting earnings was 35.4% move. So that's INO. Here's let's look at 3D DDD. So this is in the 3D printing, and I know that market, there's a lot of enthusiasm. The 3D printers went way up initially, then they came way down. They're back now in favor, starting to come back up, the 3D printing industry. So I'm going to open this up really quickly.
How many years ago was that?
So that was a long time ago that these 3D printers, were, a lot of them, they're way up, and look, sometimes the technologies take a while to, adapt, for people to adapt into the economy. So it could be way ahead of its time. But you could see here as low as $4.60 this year, now $38.22. That's expected to report today after the market close. Right now, that straddle is implying a move 17.2%. So you could see their options are pricing in a pretty big move, right? 17.2%. That's a pretty healthy move right there. Let's compare it to the last 4 quarters. So in the last 4 quarters, on average, the magnitude of the move was 8.8%. In the last 4 quarters, the high move was 14.4%. Last 12 quarters, on average, the magnitude of the move was 13.9%. And the high move after reporting earnings was 32.4%. So if we compare it to the averages, if we compare the implied straddle right now to the historical absolute averages, we're 8.4% above the 4-quarter average, 3.3% above the 12-quarter average. So that's how that straddle is lining up going into the earnings. NIO, of course, that we were just talking about that. That straddle implying right now a move of 15.5% And that compares to a 4-quarter average move of 9.1%, with a high move in the last 4 quarters, 16.2, and a 12-quarter average move of 15.5%, with a high move of 53.7% in the last 12 quarters. So NIO could definitely move here after earnings. So comparing it to the 4-quarter average, we're 6.4% above there, in line with the 12-quarter average historical move. Zoom, that's another one coming up today after the market close. We got straddle implied a move of 13.2%, and that is compared to the 4-quarter average move, actual move 17.6%, and the average of the last 12 quarters, 15.2%. So we're 4.4% below the 4-quarter average, 2% below the 12-quarter average. A high move on that stock in the last 12 quarters, 40.8% in Zoom. And I don't know if that's been out there for.
Yeah, I was going to ask if you could maybe look at this one a little. Well, one of the chameleons was asking if you could look at Zoom earnings a little deeper. I know there's probably only 4 or 5 earnings.
Yeah, that might not. We might not have a full 12-quarter history on that one. So I'm going to go to Zoom here. So you could see here that it does look like less than 12 quarters. So let's see what it did, at least in the short history that we have. So what we're looking at here in this chart is these bars here represent the magnitude of the move implied by the straddle. So if you bought the call and the put at the money before the earnings, right? Then your buying premium, the stock has to move enough to cover that premium up or down. Okay. So as you can see here, if you start from 0, this is the percentage moves. So these bars represent the up or down move implied by that straddle. So as an example, I'm hovering over this one, November 30th, 2020, after the market closed. Zoom reported earnings. The straddle prior to the report where it closed was implying a move of 13.5%. The actual move was down 15.1%. So you could see that move exceeded what the straddle was pricing. So if you sold that straddle, you'd have to buy back higher the next day. If you bought the straddle, it would have been profitable because the move exceeded that price. So this red bar is showing you the move to the downside, and as you could see that it crossed that bracket, meaning the move was higher than anticipated. When you see this green bar over here, that's showing you the actual move, but it was to the upside. So August 31st, 2020, Zoom reported earnings. The stock was up 40.8%. The straddle heading into earnings was implying a move of 11.4%. So you could see there that move way exceeded what those options were pricing in. So that's what it looks like to the upside. Here, when the bars are below the bracket, that means the move was more muted than the expected move. So let's take a look at the summary statistics. So we got 7 quarters here. The stock overestimated the move 43% of the time. So the rest of the time, 57% of the time, the options underestimated the move. In other words, they're priced lower than what the actual move was. So if we took the average of the estimated moves, it looks like 12.1% on average, and compared to the average of the actual realized moves, 15.2%, you could see that's a 3.1% differential between the implied and the realized move in favor of the realized move. Right, so the realized move on average was higher than the implied move. So that's really quickly when you're comparing straddles to actual moves. Let's take a look at the implied volatility, what it tended to do. So here's the implied volatility, and this is looking at a 30-day maturity an option with a 30-day constant maturity. So when we're looking at the near-term options, those have more gamma. So you're looking at movement, right? Options that don't have longer to go. Most of it is gamma. It's looking at movement. As you go out further and further in time, those options have more implied volatility or vega risk. So this is looking at an option 30 days constant maturity. So this is what it tended to do from the day prior to earnings to the day after reporting earnings. On average, the implied volatility declined 15%. The implied volatility on average day before earnings was 78, this is where we are today, 76.4, so close to that. The day after earnings, the implied volatility on average dropped to 66.8. 5 days later, it looks like it was near the same, maybe ticked up a little bit, on average 67.2. So that's really quickly an analysis of the straddle and implied volatility from a historical perspective in Zoom. Were there any other questions on Zoom specifically?
No, that's perfect. Thanks.
Let me just take a look what Zoom did actually since its last earnings. So here, we're taking a look at, on this report, what we're curious is, okay, we looked at the earnings reaction to the report, but after a company reports earnings, there's still about 3 months to go between earnings, right? And then the stock will start drifting based on expectations building up into the next earnings. And that drift can tell us or give us insights into what's being built up. Is there more optimism or pessimism being built up in relative terms? So we don't have a long history. Again, this is not a long history, but this is what tended to happen in between earnings. So historically, in between earnings, that the stock on average gained 30.4%. So that's after reporting earnings. Average move 30.4%. The median move is 24.9%. So even in our short history, it's seen large gains heading up into earnings. 67% of the time it drifted higher, 33% of the time it drifted lower in between earnings. And the average move is 37%. So let's see what it did this time around. So this is this little red guy. That's what it's showing us, the current drift. So currently, since it last reported earnings, it's down 8%. Okay, so let's take a look over here. So over here, it reported earnings November 30th. That day, it was down 15.1%, right? 15.1%. Sorry. Let me hover over, explain. So you could see here, this shows the 4 days, how the stock behaved around the previous earnings. So the adjusted close over here is telling you those days. So remember, so if you're looking at it, November 27th, the stock closed $471.61. November 30th, stock closed $478.36. So you could see those 2 days have rallied into earnings. November 30th, after the market closed, stock reports earnings. Next day, stock drops 15.1%, closes at 406.31. So people got to read the new numbers, entered into their models, listen to the management's discussions. They repriced at 406.31. What happened since then? Now we're at 383.90. So again, it drifted down 8% since that last day. So this is just letting us know that since that last reported earnings, we're not seeing lots of enthusiasm being built up, or maybe it's already priced to perfection already. Like, we could do that analysis, but really quickly, just starting to gain insights what's happened since then. Because if you're starting to strategize yourself around earnings and you want to see your potential upside, downside, potential for a big move, down move, you want to start building up those pieces to make sure you're taking things into account when you're putting on a strategy. Well, that's 9:30, I guess.
Nice job, Dima, as always. Listen, one quick question. The pre-market email that people can register for, do you know what time that's typically sent out, developed and sent out algorithmically?
So yeah, that's generated, internally. I think it starts to kick off maybe like, I have to check, but I think maybe around 9 o'clock it starts to get generated.
All right, maybe we'll find out
About 9 o'clock it starts, yeah, because it takes time to, it accumulates, the data. It tries to scan for press releases that potential catalyst behind moves. It starts compiling it, and then it has to create it and generate and send it out to, the people who are registered.
Excellent. Excellent.
Yeah.
Thanks, Dima. Look forward to the show tonight, buddy.
All right. Thanks, everyone, for joining us. Hope to see you guys tonight. Stay safe. Have a great trading day.
6 p.m. this evening.